Hello, everyone. My name is Alexis Hutchinson, and welcome back to the FYE Talks podcast. We're here with an awesome guest speakers to speak from Abound Credit Union, and I'm going to let them introduce themselves. But don't forget to tune in every Tuesday and Thursday at 1 p.m. for awesome content just like this. We're here to help and provide you with all the information we can. So would you guys like to introduce yourselves?
Sure thing. Thanks, Alexis, for having us. We're happy to be on the podcast today. My name is Holly Sexton, and I represent Abound Credit Union in the capacity of public relations and as a financial education professional. Happy to be here.
All right. So thanks, Holly, and to everyone. Thanks for taking a few minutes here to learn about the basic steps involved in getting a mortgage. So whether you're buying a home for the first time, which many young folks are, or refinancing a loan you already have, I think we'll have some valuable tips here to help you navigate through the process. So my name is Chuck Eads. I'm the Chief Lending Officer here at Abound Credit Union. And in this video, we want to talk through the mortgage process, help you get prepared for home ownership, or some ways you may be able to save some money by refinancing. So some quick housekeeping items and regulatory stuff for you. As you would expect, the credit union is an equal housing opportunity lender. We're also federally insured by NCUA. We are also federally regulated, by the way, so we are held to a lot higher standard than companies that just do mortgages. Something to keep in mind as you have a lot of choices out there in the mortgage industry right now. So let's jump right in. We start in with 4 easy steps for home buying and refinancing. So we will touch on each of these topics and let the conversation go in whatever direction it does. That's the benefit of doing these presentations in this manner. And then again, if our host has any questions for a little bit of Q&A, we certainly welcome that. But it is mostly intended to be informational. So starting out with buying a home, the credit union actually offers no money down purchase loans for if you're purchasing a primary residence. We offer construction loans if you're doing a ground up build with a custom builder. And we have a lot of different refinance options for saving money on the current home loan that you have if that is your current situation. So digging into step number 1 before you shop, you definitely want to be ready and do your homework. So we're going to talk through that right now. I always recommend touching base with your mortgage lender before you even get started in this process, especially if purchasing a home. Getting pre-approved is really important because it allows you to fully understand the loan amount you qualify for, which then should give you an idea of what purchase price you should be looking in for your new home. Our mortgage experts, like it says here, are licensed by the NMLS. That's the National Mortgage License System that came into play several years ago by the Consumer Financial Protection Bureau. My NMLS number is 555763, by the way. And all of our folks here at Abound really have that local knowledge and in-depth local insight that you want when you're going through this process. They understand the neighborhoods that you're looking at, where you live now. And that's something you won't necessarily get with the larger national lenders that are out there. So you'll also want to make sure when you're going through this process that you fully understand what your monthly payments will be when it's all said and done. So that includes your principal and interest payment, your property taxes, your homeowner's insurance, and any homeowners association fees that might be tied to the property that you're looking at. In addition to that, understanding your full monthly payment and what's involved with that, you'll need to understand really have a good idea of how much money you're going to have to bring to closing when you're ready to do so. So our 100% financing options mean that no down payments required, and it's subject to certain credit qualifications, but you'll still be responsible for bringing your closing costs, which can run a couple $1,000s in many cases. For those closing costs or down payment, you can use your own money that you set aside in checking and savings. You can get a gift from a relative. This does involve a letter from them stating it's not a loan. Or the sellers can actually pay for these costs. It may affect the purchase price of the property, and you'll definitely want to include that in the negotiation process when you're putting together the purchase agreement for your home. So getting started on payment. Now, our loan experts will be glad to help you walk through this process, but we've got a variety of loan calculators and such out on our website. This is one good example right here. You'll want to make sure you understand how much your total payments are. Again, principal and interest based on your loan amount, interest rate, and the loan term. You can play around with this on our website, and you see an example here where the home purchase price was $250,000. Again, you may qualify for a no down payment program. In this case, we used a down payment of $10,000. So thus your loan amount is $240,000. That gives you a principal and interest payment of $1,274. Let's round up. I'm imagining that's on a 30-year loan. In this case, property taxes monthly are estimated at $208. Generally speaking, your annual property taxes will run around 1% of the purchase price of the property. So again, in this case, 208 is roughly 1/12 of $2,500, which is 1% of your purchase price, shown there at $250,000. We just estimated insurance. That's your standard homeowners insurance at about $62.50. And then HOA fees, homeowners association fees of $150. So your total monthly payment in this case, including your principal and interest, property taxes, homeowners insurance, and any potential HOA fees, not all properties have them, would be a little under $1,700 a month. So then the question becomes, is that something that you're comfortable with? Just because the mortgage lender can qualify you for that loan amount and that monthly payment doesn't mean that you have to be comfortable with that. You definitely want to have those conversations with your loan expert before you get started, because you may come back and say, hey, I'm really only comfortable with a $1,200 mortgage payment each month. So what does that equate to as far as loan amount, as far as purchase price, and so on? So another thing I would want to throw out there is regarding HOA fees. And again, for many properties, they're not in a homeowners association, but you'll definitely want to know that going into the process before you make an offer on a property. Some developments can be a little bit more in terms of homeowners association fees if you have amenities in the neighborhood, like a community swimming pool, community common grounds, and things like that. But the big one to watch out for is condominiums can be several $100s a month, because you're paying for outside maintenance, all kinds of other things with the condominium association fee. So you'll definitely want to make sure, if you're looking at a condominium, that you ask questions about what the homeowners association fee will be on there. So again,
is that a question for a realtor?
Yes, absolutely. And so in most cases, when you're working with a realtor, they're accessing information on the sites that they have access to that will give all the specifics of the property. One of those things that should be out on the listing information that you would see on Zillow or Realtor.com would also be any homeowners association fees as well.
And so, Chuck, is there a way that somebody could take, their total amount of debt that they have, they have a car payment, things like that, and maybe factor up how much of a mortgage they should be shooting for, or just some kind of reference to know this is how much would be a healthy amount of additional debt to take on?
Yeah, that's a great question. And so that is definitely one of the things that our home loan experts would work through with any member that's going through this process. So that would basically start like this. So we'll talk through an example just to keep it simple. So let's say that your gross monthly income is $36,000 a year, which is $3,000 a month. Okay. So a good rule of thumb for a mortgage payment is you want to try to keep that around 25% or less of your gross monthly income. So, okay. So 25% of 3,000 is $750. So that would be a good target for you if that was, similar to your income. Now, you mentioned the rest of your debts, right? Generally speaking, most mortgage lenders are going to try to keep your total obligations, which includes your mortgage payment of $750 plus your car payment, credit card payments, student loans, whatever you have, to around 42% of your gross income. So take 0.42 times 3,000, and that's how much you have to work with on a monthly basis. That's generally kind of the guideline for what would be approvable. Now, we can go above that in certain situations. And certainly we do, but that's a general guideline that you could use. So off the top of my head, my math skills have eroded a little bit since college. I don't know what 42% of 3,000 is, but it's going to be roughly $1,200, $1,250. So you would have a $750 mortgage payment, again, including principal, interest, taxes, insurance, HOA fees. You would have about another additional $450 to $500 a month in car payment, credit card payment, student loans. So that would be a general rule of thumb to get you started. And again, we'll take a look at your credit, what obligations you have out there, and we'll definitely work you through that process and hold your hand step by step.
Alexis, that was a great question, and thank you for answering that so well, Chuck. And that's why step one is talking to a professional first before you start shopping. That way you don't get your heart set on a house or even look in the range of something that may not work for your monthly payment and what you're comfortable with. Great
Absolutely.
Yep, and that segues perfectly into the next slide, which is starting to shop, right? So before you start the process, one, you've had that conversation with a home loan expert, but the second part is coupling that with getting a basic understanding of what you're looking for and what your requirements are for a home, right? Number of bedrooms, number of bathrooms, whether you want a garage, proximity to your work, access to high-speed internet. If you work from home, school systems are just some good examples, some things you would want to consider before you get started once you've been through kind of the pre-approval stage there. So online is a great way to start shopping. So websites like Zillow or Realtor.com are just two examples. They allow you to plug in your criteria, bedrooms, bathrooms, minimum price, maximum price, and they'll set up a search area for you within a certain mile radius of where you'd like to start shopping, and you're up and running in basically no time. So I would also add here, working with a realtor. So I always encourage working with a realtor in these situations because they have a lot of expertise on a lot of things that really, especially if you're doing this for the first time, you may not be intuitive or anything like that. So they can assist you in your search, assist in negotiations, and they're really a valuable source of guidance for any appraisal or inspection issues that come up during the process. Truly valuable partner when sellers are entertaining multiple offers as well. Right now, the purchase market is very hot. Inventory is somewhat low. And so as you go out into the housing market, you may get into a situation where the seller is entertaining multiple offers. Your realtor will play a valuable part there because it's their job to sell the seller on the fact that you're the best buyer for that property. So that's all part of what goes into that. And keeping in mind too, that as a buyer, your realtor's fees are actually all paid by the seller. So there's really no cost to you as you go through this process as a buyer.
Does Abound have resources to connect you with a realtor?
We have some realtors that we work with from time to time, yes, that will refer us clients because they've been happy with the experience of doing a home loan at the credit union. So we don't advocate specific realtors though, or refer them on our website, but we could certainly point you in the right direction, give you a few options if that's something that you're interested in.
Fantastic.
Yep. So you found a home that you really love. What's next? So timing absolutely matters here. The housing market is very active right now. Interest rates, mortgage interest rates are incredibly low. They're at historically all-time lows. And so demand is very high. And as I mentioned a minute ago, inventory is very limited right now. So again, like I said, some homes are seeing offers come in as soon as they're listed, multiple offers coming in. And so sellers will almost certainly require a copy of your pre-approval letter in order to even consider your offer, especially if multiple offers are coming in. Offers that are pre-approved will be given priority over those offers that are not. So you want to make sure that you're ready to go with that. Our goal during the process is simply to help you get comfortable with the process from start to finish and to prepare you to act quickly if you need to. So if you already own a home, we'll kind of shift lanes here over to refinancing. So we're actually seeing a tremendous amount of refinance activity going on right now because interest rates are so low. 15-year rates are in the mid twos and 30-year rates are in the upper twos right now. And so that's as low as I've seen it. I've been doing this for over 20 years. And it's an incredible time to not only refinance, but also to purchase. What I would consider your affordability index to buy a home right now, you're going to get more home for your money than at any time basically in history. So it's an exciting time to be able to do that if you can find a home that you like. So again, shifting gears over to refinancing, in many cases, members or borrowers are looking to do a couple different things. One, obviously, they want to lower the interest rate on the loan they have now. And so there's a couple different approaches you can take there. One would be simply to lower the interest rate and thus lower your monthly payment, at least the principal and interest portion of that. Your taxes and insurance and HOA fees would not likely change in that process. But we also have some borrowers that would like to actually pay their home off sooner, right? So when you lower the interest rate enough, you may be able to cut the term of your loan. So an example we could kind of talk through is, let's say that you did a 30-year loan 5 years ago. So you have 25 years left to pay. You may be able to lower your rate and pay off that loan instead of 25 years in 15 or 20 years. So again, helping you build equity quicker. And again, the idea of having your home paid off and free and clear in 15 to 20 years is probably, pretty enticing for a lot of folks. So we have a lot of borrowers right now looking to take cash out of their home. So let's say you're not so concerned with getting your home paid off. Maybe you want to do some home improvements, right? It's a good time right now to take cash out of the home. Homes are generally appreciating, partially because of supply versus demand, in the fact that the demand is high, the supply is low, so homes are continuing to appreciate, based on that basic economic model. And the great thing is, in most cases, your closing costs can be included in your loan. So if you owe $125,000 and there's $2,000 in closing costs, in most cases you can do a loan for $127,000 and really not have to concern yourself with that during the process. We do collect the appraisal fee up front. That's usually around $450, but any other charges can be rolled into the loan. So getting started. What do you do? So the credit union offers incredibly competitive interest rates. We're known for that, not only in mortgages, but in autos, credit cards, and things like that. We also have generally lower closing costs compared to other mortgage lenders. Why is that? Because, like I said, we make money on other things like car loans, credit cards, and not just your mortgage, right? So you can apply when you're getting ready. You can apply online on our website. We have, I'm not showing it here, but we have, once you get into the informational pages on home loans, there's a button that says apply now. If you're not quite ready to apply, but you kind of want to talk things through with somebody first, then you can do that as well. We have another button located on those pages just for questions. You put in your name, your phone number, your email address, and somebody will reach back out to you and start that conversation for you, so you have an idea of what you want to do next. If you've been there and done that before, you're just refinancing, or you purchased many homes in your lifetime, great. You can apply online. If not, again, we'd be glad to slow down a little bit at your pace, walk you through any questions you have, maybe throw some things out there that you didn't necessarily think about, but you want to take into consideration during the process. So, our goal is to do whatever needs to be done, whatever your speed is and whatever you're comfortable with. So you can also visit any of our branch locations. We've got several branches here located in Hardin County, but we've got a variety of branches located all over the state, all the way from Louisville to Danville, down to Glasgow and Bowling Green. So all conveniently located all around central Kentucky. They can help you with not only mortgages, but auto loans, credit cards, and those sorts of things. So we can help you make more possible in a variety of different ways. But it all starts at our website. You can see that there, www.aboundcu.com.
Thanks so much for the information. Alexis, do you have any questions?
No, I think that you've done a fantastic job in taking a lot of that information that can be very confusing for first-time home buyers and really, taking a lot of the mystery out of it. It seems like that process is very straightforward. And I know when I was purchasing my first home, I would have loved to have been able to, go through all those options and things like that. It really demystifies the entire process.
Yep. So, that pretty much wraps up things for today. So if there's any questions, again, you can check out things at our website. You can go into any of our branches, and we have a variety of folks that'd be glad to help you at, again, whatever pace you're comfortable with. If you just have questions, we're here for that. And once you're ready to go, we're ready to take care of you that way as well.
Awesome. Thank you so much, Chuck. And also, I would invite people to visit aboundcu.com while they're there and checking out our calculators and figuring out what their future could be, what's possible, to also get on their phone or while they're on their desktop, whatever device you're on, to go to aboundcu.com, click on the Learn tab, LEARN. And say you're sitting in a drive-through or whatever you're doing, you're sitting, you're waiting. 5 minutes is all it takes to take one of our learning modules. It can give you information such as Chuck presented within 5 to 7 minutes. So you can raise your financial IQ in just a few minutes a week. It's a very, very small amount of time to give in order to walk away with this kind of knowledge and be empowered. So Alexis, thank you for having us. And Chuck, thank you so much for presenting today. I always learn every time.
Yeah, my pleasure. Thank you.
Absolutely. Thank you guys so much for coming on our podcast today. It's been fantastic, and we'll definitely have you back for more financial education. This is super valuable. And, as a young college student, or even as somebody who's more established, it's good to know ways that you can, take control of your money and make sound financial decisions. So thank you guys so much. Thank everyone for viewing the podcast today, and tune in every Tuesday and Thursday at 1 p.m. for more episodes just like this one on a whole variety of topics. To help you kind of take back your money and your educational journeys and things like that. And thank you so much.